Everybody, so I'm just going to go over a trade recap. So this is copper. All right. So copper here had a very strong selling wave, very strong selling wave right here. So because it has a strong selling wave, quantify it. It's 2.8 times average down volume and the biggest in 10 down waves. Again, 2.8 times average down volume, biggest in 10 down waves. All right, that is very significant. More so because of the 2.8 times average down volume. It's not normal pullback. Normal pullback will not have this type of pressure. So there's something going on. Normal pullback will not have 280% of normal selling pressure. So after that, the market reacts strongly. So as it reacts strongly, I want to see a couple of things. First, the amount of pressure that comes in. The amount of pressure that comes in is a little bit more than normal. It's 30% more than normal. And it's 1.3 times average up volume. But I noticed that the sellers here are blocking it. Whoever sold this, they're blocking it. So it goes up, and these guys, they're selling that bounce. So they sold this, price goes up, and it gets stuffed right here, gets blocked. Once, and then twice, and then 3 times. And then the next piece of info is that right here is where the buyers are weak. And they retest and they're weak. So after weakness, you take the red bars. If you're bullish, take green bars. If you're bearish, take the red reversals. These are reversals. 1, 2, 3. But after the weakness, red bar reverses here. There's a reversal here. So it's very clear that there's selling in the background. Buyers come back to that level from where the selling came. They get blocked, and then the second attempt, the demand dries up and it's weak, and you have reversal. So this short or this short with a stop above the high, because you're leaning on the sellers here, because they're the ones that are blocking this. See, they block once, twice, 3 times. After that, it just goes down and goes to the, I don't know where, but the idea is to take it at a level. So one important level is this right here. So you could just use this volume level right here for an exit. But I mean, it seems to be going beyond that. Might take out this low or test this area, what people call a forward value gap, of some value gap. I forget the term, but the idea is that there's a thrust, and it might test this thrust right here, which seems fair value gap. I think that's the term. So it seems like that's what's going to be testing. But if, more conservative would be just to get out here. And why? Because this is a high volume node, and it represents a potential support. All right, why? Because you had a lot of buyers there, and they caused this move up. So they might still be there. Might as well just get out there instead of risking the move. But it seems like it's testing this area, so it's an exit either way. All right, so however you target, just know the levels to target and how to get out. All right, so bottom line, selling pressure, test, retest, pass, Y, low volume, what do you call secondary test? So the secondary test here, secondary test, or third test, the tests are valid. Why? Because on the test you want to see low volume. Bang, bang. And move goes down. All right, the move's down. So, okay, so basically there are others that set up this move here in gold right here. 2.5 times average down volume, big red, weakness, weakness, low volume test, weak, weak, boom, breakdown right here. All right, and finally you had something on the euro where you had the selling pressure, big red, no volume on the pullback, it's dead. Yeah, so it goes down. Now, however, there seems to be volume coming in at this level. 1.8 times average up volume, biggest in 5 up waves. So these pullbacks hold, it can reverse back up. On crude, heavy, strong volume up here. First of all, there was selling pressure, 2 times average down volume, biggest in 7 down waves. That looked bearish. But this break was bought. So they bought the break. See that? So the demand bought the break. So this supply is no longer in play. So we'll see if this thing reverses right up here. Right? That's significant volume. The buying activity with the breakout here. See this? Breakout against this level. So if this is weak, it can easily reverse and go higher. And then finally, Nat Gas had this biggest in 11 up waves, 2.4 times average up volume, pullback weak, and you had a little move, nothing substantial, but nonetheless, prices moved up. Now you have very heavy supply coming in from a resistance area. That's a lot of supply. So we'll see how this behaves. There is one other thing. I have to go over one other thing, you guys. Over here in the copper trade, you see this selling up here that blocked the buying activity 1, 2, and 3. So there's heavy selling, and it blocked buying activity 1, 2, and 3. Right, so this needs to be quantified because this is distribution. This is distribution. It's intraday distribution. All right. So this distribution, and it doesn't have to be elongated, big base or anything like that. That's just not reality. All right. This is distribution. There is a base. Do you see the overlapping bars here? Look at all these overlapping bars. All right. So part of what gives you confidence is how strong they are in their selling. How do you know how strong they are in the selling? And you go to the tapering chart. So this is copper, and we see that 900 contracts were sold at that high. Right here, 900, right there. Then it broke. Right, because demand cannot break through. So there's a wall here, and so who are you leaning on? Where's the CM? You have to lean on the CM, right? This is the CM right there. That's the CM, or the composite man or the composite operator. In Wyckoff, you trade with a composite man and a composite operator, right? The large trader, this is him. This is his print. This is the damage he did. Sell side. Until it went to support, where it was bought up, went back up, and he sold some more here, and here, against this level. Here, and then broke. Now there's some buying activity here causing the bounce. But this is the what we call the footprint of the composite man. Right here, and that's it. Now you see for euro, we'll see. Let's go to euro and see what it would be. Oh boy, right there. See this? 12, 14, 23, 17, bang. So this is, I think it's 1200, 1400, 2300, 1700, buy, and push market higher. So this has a chance of marking up. Why? Because they bought everything at this level, forcing prices to go up. They bought everything here, forcing prices to go up. Now if it pulls back, less supply, and yeah, I mean, this has a chance of, it has a chance. You have to wait until, until it thrusts back up. But this is a accumulation right here, creating the markup in price here. Now the accumulation is being retested. If there is no supply and these guys step back in, it will be indicated by a reversal thrust green bar, which is an early indication that they're stepping back in, and that should start taking prices higher. All right, done. Thank you. Have a good day.